What's going on? Strat Soldier here for the podcast in force, the only podcast about the Strat with me, the Strat Soldier, looking at the market through the eyes of the Strat. What is going on? It is May 16th. Oh my goodness. If you watched me on the weekend shift, you got to see the hot trash indicator. The hot trash indicator. If you see me on Twitter, tweeting out trend spider charts, you would have also seen the hot trash indicator. The hot trash indicator. What is the hot trash indicator? Before we get into that, if you are brand new to trading, you don't know anything about it, you want to know how to get into trading, you want to at least understand what people are talking about, check out my ebook at thestratsoldier.com. Check out the ebook From Zero to Trading. All right, and because there's this gap between wanting to trade and then actually trading, and there's like this no man's land where nobody's talking about how to get in and how to find a broker, what's the difference between a margin account and a cash account, what's trading psychology, and no one even tells you why you should even be doing this. All right, they just try to get Ray-Bans and Lamborghinis and all this other stuff, you know. But you got to know why you're doing this. All right. And the ebook From Zero to Trading will help you determine why you are doing it, okay? I want you to get in there. I want you to know how to create winning positions, add to them, and defend them with tight stops. That's what we talk about here on Enforce, okay? So check out that ebook From Zero to Trading at thestratsoldier.com. The link is in the description. The hot trash indicator. Now, the whole point of Enforce is to have a podcast where I'm talking about the Strat and just verbalizing what's going on in the market without a bunch, because the Strat is visual. So can I do it without a bunch of charts? Why is that? Why is that the challenge? Why did I pick that? Because if you can't tell your mom or you can't tell your grandma what you actually do, then you don't know your job. You don't know what you actually do. You know what I mean? That's a really interesting idea. If you can't tell someone else in the simplest manner how and why you are doing something, you don't know what you're doing. You know what I mean? So and I'm saying being able to talk about the Strat, talk about trading, period, without a bunch of jargon, without a bunch of really cool, fancy words to make you feel like, oh man, he's smart. No, I want you to know what I'm talking about so you can go replicate that stuff for yourself, okay? So that's what we're doing here on Enforce. The hot trash indicator, I am the indicator hater. I don't like indicators. So the whole idea of hot trash indicator is a joke. It is. It's a joke. What it is right now on the SPY, S&P 500, it is May 16th. If I did not say it already, May 16th. It is on the week. SPY on the daily, scenario 3, scenario 1, scenario 3, scenario 1, followed by another scenario 1. Okay? It is a hot mess out here. And like I said, the hot trash indicator. If you see this, the reason why I said it's anything that notifies you of something is an indicator. All right, anything, and smoke alarm's going off. That's an indicator that hey, there's something going on. You know what I mean? You need to hey. Somebody, something that, things will start getting real busy at work. You know what I mean? And things start getting a lot more emails, and you start to figure, okay, what's going on with the tempo of work? That's an indicator. Okay. So, what I'm saying is the hot trash indicator. If you see a situation where where we're having right now is where the price is just trading sideways, and it's been trading sideways since May 5th. All right, since May 5th, 1, 2, 3, 4, 5, 6, 7, 8 days trading sideways. Okay, that is not a fun range to be playing in. We are trading from the high is 414 all the way down to 408. I say all the way down, but it's not that far. Okay, it is not that far at all. Every time the market starts to go to the highs, here comes the Fed. Okay, I keep talking about 418, and we still have not hit 418 yet. We got real close. We got really close. We got to 417.59. Again, that's a podcast, so I'm not talking about pennies here because I want you to drive. I want you to be able to take care of kids. I want you to be able to like do life without trying to like do math in your head. So we got to 417, but we didn't get to 418. And I believe, even though we do the Strat, and most people that trade don't trade the Strat, okay, they trade technical analysis, I believe that they will see 418 as a breakout, what they would call a breakout. And I think the institutional buyers and traders, period, are going to get in there, and they're just going to run it up. Again, the next target is 431 on S&P 500. And I think the Fed knows that. So they're doing anything and everything they can to come out, and they're raising rates still. They're doing anything they can to slow this market down. So going back to the hot trash indicator, 31311. It's just not a fun range to be in, and people are getting chopped up. People are getting chopped up, and it's just funny that you have all these people out here trying to talk about different trading systems. There could be a fair value gap thing here. We're trading in the range. You need to use a range box. Here's box trading. You're going to test the highs, test the lows, just like we do in the Browning formation, but it's in a rectangle. This is a downtrend. We're going to keep going. We're going to keep shorting it, even though it's going to the highs, because we know it's going to keep going to the lows. So people that are shorting stuff are getting wrecked. The people that are buying calls and buying shares going long, they're getting wrecked because it's just trading sideways. So you got to know how to take profit. All right, you got to know how to take profit. So that's why I keep telling the Stratters, push your stops up till you get stopped out with profit. That's what I say. So the last episode, May 1st, the last episode we had here, a lot of things, not much has changed since May 1st. We did have May 1st, our last episode, we were up at 417, and then May 4th, they took the SPY all the way down to 403. So 417 down to 403 since our last podcast, the very last episode. That is an outside bar, compound scenario 3 of all the previous bars. And if you're looking at a chart right now of S&P 500 on the daily chart, May 5th to May 16th, they're all inside the range from May 1st to May 4th, okay? It's not fun. It's not fun. I did have some good trades in AMD, Netflix, and Amazon. That was last week, okay? This week, I'm not touching anything. Even though AMD did hit monthly magnitude, even though Amazon did hit its monthly magnitude, they hit their targets for the month that we were looking for. I took profits, and I'm glad I did. Okay, because I could still be. I hope it goes back up there. I really hope it gets back up there, but I don't have to do that. Okay, and honestly, if I would have got right back in today, I would only be making a few more dollars more than I actually got stopped out with profit with. Okay, so you got to look at that kind of stuff too. I want to talk about mother bars. Okay, so this compound 3 on the daily S&P 500 on the daily chart from May 1st. If you're following with me, May 1st, you see a shooter on the daily. Okay. Some people call this inverted hammer. No. That's a shooting star. Okay. Some people call it a shooting star. That's a shooter. Okay. And May 2nd opens up at 414, and they just start selling it all the way down. Okay. May 3rd comes in again, opens up at 411, trades up to 413, and then all the way back down to ends at 407. And then May 4th, they just took them all the way back down to 403, like I said. And then May 4th comes in. May 5th opens at 408 and starts trading up. Everybody's like, okay, we're in. It's going to be great. And then we get stuck. Okay? We get stuck. So that if you look at that scenario 3 and what I described from May 5th to May 8th, just trading sideways, that's a mother bar problem. Okay? That's an issue where you have a really large bar. It could be a scenario 3. It could be a scenario 2. But then the very next bar opens and it's inside that range of the previous bar. I mean, really inside. I mean, dead in the middle. All right. And it's really small bar. And then the very next bar comes in, and another bar comes in, another bar comes in. And it's, again, just trading sideways, stuck in this pattern, trading sideways. And so what it is Rob Smith called it the mother bar. It's a mother bar. And then here comes all this little babies coming in right after it, okay? All the little baby bars. We don't want little baby bars. We want long green and red bars. And we want to take these reversals to the highs or to the lows of the broadening formation. We want to go through previous range. Mother bars, with mother bars, the bars don't go very far. Go to, if you are listening to me and you're in front of a chart, okay? If you're driving, don't you pick up your phone? Don't you do it? Not even to look at my stratsoldier.com. Don't you even do it? No, seriously, don't do it. Funny, not funny. Don't text and drive and look at. Don't trade and drive. It sounds funny, but people do it and they lose money big time. If you look at today, May 16th at 9:30, I was going to give you military time, but at 9:30, the price opens up at 411, trades up to 412, trades back down to 410, trades back up to 411. Okay, that's a doji. That's a doji where the open and the close are dang near the same. Okay. Then the very next hour at 10:30 opens up at 411, closes at 411. Okay. The next bar opens up at 411, closes at 411. The next bar opens up at 411. This is at 10:30. Opens up at 411, closes at 411. Okay. I'm not making this stuff up. Okay. I'm only telling you the open and the closes. I'm not talking about highs and lows. The open and the close right now, okay? But we do count the wicks. So these bars that I'm describing are inside their very first hour. The 1, 2, 3, 4, 5th hour at 1:30. 1:30 opens up at 411, closes at 411. 2:30 comes in, opens up at 411, closes at 411. Okay. All right. So you just had 1, 2, 3, 4, 5 bars all open and close. Dang near. We're not talking about pennies on the show. Okay. But they all open and close the same dollar amount. That's a problem. That's a problem. And they're all trapped in that first bar. That very first bar. Okay, just trading sideways. Now, at the end of the day, now there's only, if you do 60-minute bars, the very last day is really only 30 minutes. But that's also an important time frame, okay? That last 30 minutes. Because that's when the big institutions, that's when they start buying. They're just like, okay, well, let's see what's going on let's see if we can start creating positions for tomorrow or the next day. Or what are we going to do? You know what I mean? It's the very last orders. If you're into, don't let me go off the rails here. Don't let me ramble. That was what I was going to say. But if you are looking at volume and you like to look at volume, okay, turn on the volume and look at, it'll be all these bars. For people that don't know what volume is, it'll show you how many people are buying shares, and they're also bars that are underneath the candlesticks on the bottom of the chart. That's what that is. It's volume. Green means they're buying, red means they're selling. Okay, just like the candlesticks. Okay, green means buy, red means sell. All right, and volume is another way to validate price. It is. We ignore volume. I honestly ignore volume in the Strat. Rob Smith also ignores volume only because he can't. He says he can't quantify it. Okay, but if you like to use volume, and it really doesn't matter how many shares that are trading before you get in and all that other stuff. You just want to know volume is there. Okay, volume is there, and it's confirming what you're seeing. If the price is going up, the volume should be going up. If the price is going down, the volume should be going down. Okay, it's just reconfirming price. Okay, that's all it really is. It's just gives you another like, okay, all right, I got a reason to be in this thing. You know, just more evidence. More evidence. So again, you turn on the volume. The volume is going to be at the highest level at the beginning of the day and the end of the day. Okay, the beginning of the day and the end of the day, and it will be the lowest around lunchtime, about 12 o'clock, 1, really low. Now, I know not all traders go to lunch at 12:30. All right, I know that. And most of them are probably just staring at the charts all day anyway, so they're not going anywhere. But you'll see at 12:30 the volume drop off, and then you'll see most of the time. I'd say, should I say most of the time? I'll say observe it for yourself. You decide the frequency. But watch 12:30. Watch 12:30, okay? And in whatever time zone you're in, I understand. But watch 12:30 Eastern Standard Time. You will see that if they've been selling all morning, 12:30 is going to be the deciding factor if they flip it and start buying it, okay? Same thing for buying. If they start buying, volume will start, they'll buy all morning. Here comes 12:30 around lunchtime, and then you'll see the market, you'll see like the volume start dropping off, and then you'll see, that's the time, are they going to start selling? That's when usually that's when that happens around lunchtime, 12:30, okay? That's something I've seen myself, and it was reconfirmed in this CMT Chartered Market Technician curriculum that I'm going through right now. But the very last bar, at the end of the day, okay? Again, it's only 30 minutes. You'll see that it opens up at 411. They cannot get outside. They cannot get the price to go to the highs. The buyers cannot take over the price, and it trades below 411.03. 411.03. I got to give it to you accurate, so when you see your charts, you can know what I'm saying. It trades below that, and it completely takes out the rest of the range. It gets past 410, and that bar ends at 410.24. Okay, $410.24. So it completed. It got out of this mother bar range. Okay. You're going to see this a lot, this mother bar issue, and we've been seeing it a lot. I just have not talked about it on this podcast yet. But mother bar problems, okay? This is not. I know we just had Mother's Day. It has nothing to do with moms. If you're a mom out there, so I'm not talking about you. You're not the problem, I promise. But that's just what we call it, because you got this big giant bar, and then you got all these, that's the mama bar, and then you got all these little babies just trailing behind it, and we don't want to trade in that range. Again, we use their broadening formations. Okay, look at your broadening formation. Are we at the highs, the middle, or the lows? I'd rather you see you'd rather be at the high or the low. You don't want to be trading sideways in the middle. But we will take reversals that'll get us outside of that mother bar, okay? That's one thing that we will do. But I tell you what, mother bar problems on SPY. What did it do in S&P? What did it do in Dow Jones? Dow Jones did go 2-1. It went 3-1-2, continuation down today. Its mother bar problems stopped around 130. And it continues to just trade lower. QQQ was the winner for today. They started buying at 9:30, and they just bought it all the way up until 12:30. All right? Go look at this chart for NASDAQ. QQQ. I know I'm talking about mother bars, all right? But I want you to, what I just got done talking about, volume. Go look at QQQ on the 60-minute chart. They're buying it on the 60s. All right, 0930, very first hour, they're buying the heck out of it. Second hour, they're buying it. Third hour at 11:30, they're buying it. 12:30 turns red, turns into a shooter. 1:30 keeps selling. You know, 2:30 they try to take it back up, and then the last hour, a simultaneous break on all three indices to the lows. Okay. But there it is at 12:30 Eastern Standard Time. Okay, I want you to look at that. Now, I'm not telling you at 12:30 start shorting stuff. 12:30 start buying stuff. Don't, I'm not telling you that. I'm saying look at it for yourself. All right, look at it for yourself. Really interesting stuff. Let's go through Benzinga news real quick. That's mother bar problems. Let's go through Benzinga news real quick. Is there anything interesting that happened today? Honestly, everybody's waiting for J-Powell. The Fed talks again today. Let's see here. The President Biden said had good productive meeting on debt ceiling. Said there is still work to do. Made clear to the speaker we will speak regularly over the next several days. Oh no, Biden said defaulting on the debt is simply not an option. It's disappointing that the Republicans refuse considering raising revenue. We don't talk politics on my show, okay? We don't talk politics on the weekend shift either. Let's see here, but it's in the news here. House Speaker McCarthy says further conversations on debt ceiling necessary. So I'm sure all of the news is about the debt ceiling. So it looks like the entire market is paused until they figure out this debt ceiling thing. All right, that's what I'm scrolling down Benzinga news on TrendSpider. If you need a link to get into TrendSpider, I'll put that in the description as well. And get you 25% off of any plan there. It says McCarthy says it is possible to get a deal by the end of the week. I mean, that's a lot of news about the debt ceiling. I'm scrolling. That's the news for today, okay? May 16th, the news is the debt ceiling. Oh, my goodness. That's it. That's the whole news from Benzinga, all right? It's pretty cool that it's right here on the charts here in TrendSpider. I don't have to click anything else. And I trust Benzinga. They're good peeps. They're good people. That's it for Mother Bars. Go check out thestratsoldier.com. I got another webinar is closed. The May 17th webinar is sold out. Thank you so much for everybody's support on that. Those people that are in that webinar, get your pencils ready, get your notebooks ready. It's going to be awesome. We're going to go through the entire strat in one night, and you'll be able to trade with confidence after we get done working with each other. I got a lot more in there in the stratsoldier.com. Go check out. I got courses. I got one-on-one sessions. I got an ebook. Go check it out. Pick out what works for you, okay? Pick out what works for you, and then with anything, you get email access to me, all right? And then you can ask me all the questions you want. I'm here to help, okay? I'm here to help you figure out your style. I'm here to help you figure out how you can create an effective trading plan that you can execute on your own. Because go back to my other episode, all your trades are your responsibility, okay? All your trades are your responsibility, but that's how you want it anyway. You would be really mad, and maybe some of you are really mad to look at this. I'm talking about this hot trash indicator, but you see how everything's just trading sideways and being really nasty right now, and you know what I mean. And you go look at your financial advisor, and you're like, why are you doing this? Why do you keep putting my money in the SoFi? SoFi's at $4 right now. Why do you keep putting my money in SoFi? LCID, Lucid, it's at $7 right now. Why do you keep putting my money in Lucid? You know what I mean? Once you know how to trade for yourself, it's going to be, you'll see the charts in a totally different way. Palantir. I've been talking a lot about Palantir on Twitter because again, it's a stock that people love talking about, but are people buying it? People did start buying it around May 9th. That's the biggest change right now, but buyers have to keep buying. Okay, that's what I talk about all the time. Buyers have to keep buying, and if they don't, they're going to take profits. They will. All right, so right now, Palantir at $9.47. They got to keep buying or it's going to go back to the lows. This is the Strat Soldier for the podcast in force. That's all I got for right now. I'll talk to you guys later. Go check out thestratsoldier.com and check out my execution course in my